Welcome to Accounting 360, Accounting Information Systems, and we're going to take a look at the Dietrich Farms cash flow analysis, and we're going to look at how to do the Excel spreadsheet. Let's take a look at what we've got here. So the first thing I'm going to do is let me first tell you what the expectation is that the expectation is that you're going to be able to recreate what I do for the year 2020, which is basically doing the initial mortgage and purchase of the land. And then we will do the cash flow for running the business when we plant corn. And then what I will have you do is recreate that same information for planting soybeans. So I will demonstrate with corn. You will follow up with soybeans. And as you can see that there are actually three things, but we're not going to worry about wheat. You'll notice here that I've grayed out a part of the sections. Those are bits of information that we're not actually going to use, but is on the exhibits that are there. I've also rearranged a little bit the numbers. I'm going to say I'll give you a moment here to try and set up your Excel screen to look like this so that when I start entering stuff in, you will be able to follow along. So let me first give you a moment in time to set up your Excel sheet this way. And feel free to pause the video. I'm only going to wait about 5 seconds and then I'm going to continue. Okay, so continuing on, this will be the first screen which we will only be utilizing November and December, because if you've read the case study, you notice that part of what's going to be happening is the farmer is going to see whether or not it's worthwhile to buy this extra land and farm it with corn, soybeans, and wheat. In fact, let's actually go to the information in the case study. Now, for this particular cash flow, and I will just say up front that cash flow is a very common thing that you're required to do, whether you're working in public accounting and helping out a client, or if you're in corporate accounting, working for a certain department, you will be very frequently asked to look at the cash flow to make sure you see, you know what the totals are by year, but you really want to see how does it hit during the months to make sure you're not over or under. And this can be for a lot of different reasons. For this one, they're just looking at what is their sort of working capital. But a lot of times I've had bosses ask me, can you figure out a cash flow to see how much money will likely, or how much cash will likely have for end of year bonuses, or how much will we need for taxes, or something like that. So cash flow is a very useful thing, and I will show you some basic Excel skills. You probably already have pretty good Excel skills, but I'm going to ask you to try and follow along with what I'm doing, because we want to set up our cash flow spreadsheet so that it is active, meaning we're not just putting in static numbers, that we're allowing the numbers to be updated from a central location, so that if I change, like, the price per acre changes, well, then it will automatically update everything in the spreadsheet. Or if the number of acres I purchase is more, it'll automatically update everything in the spreadsheet without us having to go through and change every number. So let's take a look at some of the information that we're going to need. Obviously, from Exhibit 7 and 8, these two, you can see that a lot of the information here I've recreated. I've left out a couple of things. We didn't need to know the guarantee yield or the record yield and that sort of thing. We didn't need to know equipment depreciation. And why is that? Well, we're doing a cash flow statement, right? And depreciation is a non-cash expense. So that's not going to be figured into our cash flow. It is figured into some of the other documents that they work at. So here are the information that we're going to need. And you'll notice that, right now it just kind of scrolls up and down. Here's the first little thing that I'm going to ask you to do, is to click here. And you notice that I've actually got a kind of a cell that I have created a band. So I created a band and just filled it. so that I can see where it changes. And it doesn't matter what you end up putting as the height, but just so that you can, at least for me, this is something to help me distinguish between what I'm working on below and what I'm working on above. And another thing that I'm going to do is if you click on just the cell below the band and you go to view and you go to freeze panes and you say freeze panes, it'll freeze all the panes above your cell. So now if you see, if I scroll, and you can see I now got 2021 below, that all the information that I need to reference is still kept up here without it moving around. So that's the first sort of thing I want to show you that you, and make sure you go back to home, that you are able to kind of see. Now the cells that I've put in yellow, I've kind of targeted those as being sort of control cells. And these are the ones that I only want to enter this information one time, and anywhere else that it shows up in the spreadsheet, it should be based upon what's in this cell, so that everything will be referencing this cell. And you'll see what I mean in a second. So first of all, you can see I've got Exhibit A 7 and I've got Exhibit A. I've pulled the information out that I need, so you actually don't need to fill in these numbers that I've got grayed out, just to show you that this is where it came from. I also kind of simplified the explanation here. So what other information do we need besides Exhibit 7 and Exhibit 8? Well, the thing that we're going to do is the thing that the farmer has asked himself to do. So here I've got sort of in this lighter color, he wants to project his monthly operating cash flow from 2020 to 2023 to identify short-term financing needs, ignoring the tilling option. And if you had read it, you know that there's a tilling option to where it would be an additional $1,500 an acre, or that's the tile drainage. And we don't want to worry about that now. And in fact, he's not worrying about that. So that's one thing. And we're not going to do all those years. We're going to do 2020, which is just the last 2 months where we take out the mortgage and buy the land. 2021, I will do, as you can see here, it will be corn, and then you will do soybeans, and then we'll just leave wheat. So he knew he was heading into November with $500,000 in cash. So we've got a line here that says opening cash, and we're going to put $500,000 there. So that's our opening cash. And says financing, he's going to take out a mortgage. He's going to be purchasing the 150 acres. So the number of acres is 150. The price per acre here is, you can see $20,500 per acre. So we're going to put $20,500 per acre. And Dietrich expects his monthly loan payments to be $9,800. So the loan payment is going to be $9,800. I could have put that up here, but I ended up just putting it right here. And the new mortgage for financing for 75% of the farmland. So the mortgage is going to be for 75%. And of course, if you want to change any of the way that the cells show, you just click here on the cell frame and format cells, and it'll give you the different options number. Most of the things I have I've set to, unless I really want to see the dollar amount, I've got set to accounting, and then I've got 0 decimal places, and typically I say no symbol, right? So here, if I did that, it would still, if I wanted to change this one, I'd go here and I'd say accounting, 0 decimal places, no symbol, and it would show it that way. And you know, the reason why accounting is so good is because it doesn't have it flush right. You can see that it's still a little gap between here. Like if I had this is just a regular number, you see how it goes all the way flush to the cell, whereas accounting keeps it off so that when you have many columns of information, then it doesn't get, they don't get right next to each other. Okay, so what we're going to first do here is we're going to figure out just the 2020 information. And the information is going to be, well, we've got it separated into inflows and outflows. And really, we only have one inflow. That's going to be taking out the mortgage. Think about that as like taking out a loan. That's a cash inflow. And we're going to be purchasing land. And we'll purchase the land, and then we'll make our first loan payment in December. And if you notice here, fertilizer and seed, the cost for that occur the year before the planting. In other words, you fertilize it and you seed it the year before. So we're going to be doing corn in 2021. So we need to fertilize it and seed it, or at least pay for it, in November of this year. So let's take a look at some of the information. Let's first run out and purchase our land. So we're purchasing it in November. I don't think I highlighted. Oh yeah, he knew he was heading into November, but he ends up purchasing it in November. I think the only other bit of information I want to show up, Dietrich used a 3-crop rotation. All his land began with corn, followed by soybeans and then wheat. If he were to purchase the farm in November 2020, okay, that's where it is, he would begin with corn in 2021. So that's the bit of information that we're pulling from here. And specifically, Dietrich is asking himself that he wants to analyze the operating cash flow over this time period, over one cycle, over one rotation of the crops. So that has now pulled up all the information that we need from the case study. And now what we need to do is we need to actually populate this whole thing. So you don't necessarily need to have all the lines if you don't want, but if you notice, I've got lines where there are, where we have subtotals or totals, and then of course a double underline, but you don't necessarily need to have that. Okay, new inflow. Well, let's start with the outflow, the purchase of the land. That's happening in November. And what is it? It is, so we'll first hit equals, and we will say number of acres, asterisk, which is times the price per acre. And so you're going to see that's 3,075,000. I can do the same thing with the inflow. I can say equals 150 acres, asterisk, 20,500, asterisk, times the mortgage. Now you can see I have a control thing for the mortgage that if he ends up negotiating, hey, if I get a bigger mortgage or a smaller mortgage, you can see what the cash flow implications are. And that's why I've got it as a control thing here. So we've got that number. We've got the loan payment. The first loan payment happens in December. And then we need to fertilize, and notice it's in the year before. So we're going to say, let's put the information here. Let's get in the habit of doing that. So the corn fertilizer is 105. The seed fertilizer is 100. And so what we'll do is equals 105 per acre times 150 acres. Same thing here. You can say equals 100 times 150 acres. And those are our cash flows. So here we're going to subtotal. Let's subtotal the inflow first. So the subtotal here, if you look up you're on your home tab and you go over auto sum, and it won't always come up with the correct thing, but most of the time it's pretty close. And so what I'm going to do here is, so I have auto sum, meaning it's only one thing, but you'll see down here when I go auto sum, I can auto sum all of them. Now you notice because there was a gap there, it didn't allow it. So you can either try and pick up these little corners and drag it. That's one way of doing it. Another way is you say auto sum, and if it doesn't do it, you just start on the square that you want and drag it down or up or across. And it will you make the shape that you want it to be. Now here we want this auto sum to be for each month and including the total. So I'm going to go down and pick up the little corner in the lower right hand corner to where it turns to a plus. I'm going to left click and I'm going to drag it, meaning it's going to drag the auto sum, but it's going to be for each column. And anytime you want to see what calculation is happening, you just click on the square and you go up into the toolbar up here and you click on this and it'll show you the area that it's summing. So this one is summing that area. This one's summing that area. And so we'll do the same thing here. So the sum should be a vertical sum, whereas these line item sums should be horizontal. So there's that. And then here I can take that little pip in the lower right-hand corner and drag it down. So you'll see that our total we had a total inflow of, we took the mortgage, and then we've got these total outflows. So we're going to take our net cash flow and we're going to calculate that. That's going to equal our net inflow. So I'll say equal, click on the cell, and then I will do a plus now, or I'm sorry, I will do a minus because we didn't show the outflows as negative numbers, just positive numbers. So, but it's the inflows minus the outflows. And so you can see we had an almost $800,000 outflow. Now, we will do the same thing here. We'll drag this across 1 because we want the net cash flow for December. Now, here I will say that closing cash, and this looks just like sort of the cash flow statement you've already collected. It's going to be the changes in cash flow plus the opening cash equals the closing cash. So this equals the change in cash flow, the net cash flows, plus the opening. So it shows us that we started off with $500,000 and we're already in the hole of $300,000. I thought for a while, let's try and look at it as if we started with $1 million, but let's just keep it to this. This is actually how the case study says he set it up. So here, the closing cash for November becomes the opening cash for December. So I'm going to say equals closing cash, right? Right? The closing cash for November becomes the opening cash of December. So I can still carry this one across because this is, if we look at it, this is just net cash plus opening cash. So I'll carry that over 1. Now here, this is a little bit tricky. And sometimes people get a little stuck on this. It's okay to auto sum these two. These are the two net cash flows, right? 1 month we had a minus $799,500. The next month we had a minus $9,800 for a total of minus $809. But when you go to the opening cash, you don't sum these up. You say, if you're trying to, in the total column, just in the total column, you say, what is the beginning cash flow? So I will just say equals 500,000, and then I will sum those two. In other words, you want this number to represent, you started with this beginning cash flow, you had these changes, and you ended up with this closing cash. So that is what ends up happening. And you'd be surprised how many times people get this part of the cash flow analysis incorrect when they're doing the net cash flows and the opening and closing cash. They just sum it up and it comes out really wrong. So remember, for this, the net cash flow is okay to sum up because those are all individual monthly sums. But the opening and closing cash represents a beginning and then a bunch of adjustments and an ending. And so in the total column, it should represent, this is the opening cash flow plus all these adjustments, which are 809, leaving us with the ending. So make sure you do that correctly. Okay, so now we're going to say that was all we had to do for 2020 was buy the land and fertilize and seed for corn. Now, what we're going to remember is that if that's the closing cash for December of 2020, that becomes the opening cash. That comes the opening cash for January. So we're going to say opening cash is equals, and then I'm going to highlight this, enter. And so we've brought that number down, and that's what you're going to need to do for next time, for the next one as well. So if I just adjust it here so it's all on paper. Okay, so now let's take a look at populating corn. Now you notice we've got some more inflows and outflows, and so we need to just make sure that we do them all correctly. So corn is the crop. Now here, just to keep the number consistent, I'm going to say equals 150. So you notice if I change 150 like 200, it'll change it for both of them. And here the loan payment, I'm going to say equals this loan payment. That way, if we end up with a different loan payment, we can automatically change it and everything will be recalculated. So here, inflow revenue timing for revenue timing here in this area is going to be November and December, and it's 50-50. So revenue timing, you know, we could have done this. You notice a lot of these have 50-50 timings, but this is the only one where I'm actually putting the 50% out just so that you can see and I guess understand how to approach it. We won't put it out as a separate number for the other ones, but you'll see here in just a second. So 50%, and if you notice, I've already got it set up to be as percentage. If it's not a percentage on yours, just go to the number, come up and say percentage, number of decimal places, etc. You could also get away with just 0.5, that's fine. Okay, so expected yield. So the expected yield is equals, so never just hand enter it. Always reference, your numbers up here in case it ever changes. Expected yield is 220. The expected price is 530. So the total crop inflow, you've got 150 acres, of which it'll have 220 and it's bushels, 220 bushels at $5.30 a bushel. So the total crop payoff for this 150 acres, at least for corn, should be 150 times 220 times 530, right? So a total of 174,000. But the harvest comes in 2 different months. And so what we're just going to say is equals the total amount times the 50%. And same with this, equals the total amount times 50%. And here again, we will do our good trusty sum. We'll pull this over. And then we will line item sum. And there we've got, so our total cash inflow is going to be 174,000. Now let's take a look at all these different things. So those are the inflows. Let's take a look at the outflows. Now here, let's be careful. We need to, in November, we need to fertilize and seed for soy, right? So I'm going to say equals the $80 per acre here and the 65 here. But the rest of these outflows are going to be corn related outflows. Now, you notice here that I've got fuel, chemical, custom work, drying and storage, crop insurance, and property taxes. And I've got the same list here, or at least the same order. So if I wanted to pull down all those numbers, I would just say equal the first one, the fuel, right? And then again, highlight that one and then click the pip and drag it down, and it will go down one by one. So you can see that this one then gets pulled down to the next one. This one gets pulled down to the next one. So and make sure that's part of the reason of trying to get it in order. So now we need to do is go through and make this timing. So let's start off with the fertilizer. It is in November the year before. So we will go to November, and it's going to be equals $80 an acre times 150 acres. And seed is going to be equal $65 an acre times 150 acres. The fuel is going to happen in 2 different months, 50-50, April and September. So let's go to April. And as I was saying here, whereas I specifically showed the timing, the 50%, 50%, and I guess that's because perhaps, if I had to think about realistically, you're planning on harvesting 50-50, but the weather may not, cooperate. But as far as the other stuff, those are probably going to happen in those months. But anyway, so here we're going to hand enter the 50% or the 0.5. So what I'm going to do is fuel is 50% April, 50% September. So I'm going to say equals 0.5 times $20 per acre times 150 acres. So 1,500. Now, I don't necessarily want the decimal points. I want a way to go up again into the accounting. You'll see these little arrows saying either increase the decimal place or decrease. I'm going to decrease the decimal place so it doesn't show so many decimals. And so that's April. And now we want to do the same thing for September. Now, because they're 50-50, you could probably just get away with saying equals the amount that you already calculated. And that's one way. But if you if you thought perhaps that the 50-50 split might change, you know what? I think for simplicity's sake, because we've hand coded the 50%, there's no reason why we shouldn't just do equals there. But you could see you could also do that again. Equals 0.5 times $20 per acre times 150 acres. Oops. I fat fingered that. I accidentally clicked on a different key. Okay, so I'm going to actually say, let's say equals the other one because it is 50-50. And as long as you got it in the right month, April and September. Okay, chemical work is going to be May and June, 50-50, May and June. So equals 0.5 times 68 times 150 acres. And again, we'll say we can just do equals. Custom work. So these are independent contractor works. And you notice for the one that you're going to do, soybeans, you don't actually have custom work. You don't have any independent contractors. But for the corn, we do. So let's go ahead and do it. And it will also be in May and June. So it will be equals 0.5 times 13 times 150 acres. And we'll just say equals that again. The drying and storage and other is being done it's just being done in October. So we're not going to use the 0.5. This is 100% of the thing. So we'll just do equals $97 times the total acreage, which is $14,550. The next one is crop insurance, and crop insurance only happens in May. So we will go equals crop insurance. And again, it only happens one time a year, so we don't need to do 50-50. So equals crop insurance times 150 acres. So that's 3,000. And then the property taxes happen in 4 different times. So we are going to have to do 0.25. Equals 0.25 times the property tax times number of acres. And here's another place that, rather than recalculate each time, it's probably just easier to say equal. So we have another tax payment in April. So equal that one. We have another tax payment in July. So every quarter. Well, it's not quite every quarter, but it's quarterly except for, you have to do your payment when you pay your taxes. So there's it off. October equals 1125. Okay. Actually, they do have it set up. Typically, I see that they do. Typically, when you pay your taxes, you have to estimate what you're going to pay in advance. And so you pay what you have to pay the difference in April. And then you have to pay your first quarter's payment at the same time. But I see that they've just estimated as a quarterly payment. Let's see. The next one is going to be loan payment. And so, this is linked to the original loan payment. And this is every month, loan payment every month, right? So I'm going to do equals this. Now, you could just drag it across and you'd be okay. Because what ends up doing is it just, by dragging it that way, it just referenced the one next to it. So if I go to this one, in D55, it references the one next to it. But to really be good at Excel, a lot of times you need to have it reference the original cell, even while you're dragging. So how would I do that? How would I be able to reference the cell, and when I drag it, each of these reference the B column? And the way to do this is, let me delete these. You would do equals the B55 and then hit F4 just once. And you notice that there is a $ before the B and after the B. And what that represents is whatever the target cell that you're referencing, as you drag, it'll keep that target cell. So here, if I hit enter and then I drag it all the way to December, you notice no matter which one I do, it actually looks at the target cell, right? It's actually locked on to the target cell, no matter whether I drag it up and down vertically or horizontally. So if I just go back to this one and we're looking at it, and it's B, $sign B, $sign 55. If I hit F4 again, you'll notice that $1 goes away, then the other one, and then both. So what it does is it cycles between the three or the four options: no $sign, $2 or a $sign before and afterwards, or just a $sign before or a $sign after. Now I'll let you play with this to understand it, but basically what it means is the $sign before and after reference whether or not you should lock the column and the row. So sometimes you want it to lock the column but not the row, or vice versa, the row but not the column. When you have both, it basically locks to a single cell. It changes neither the column nor the row. And I could come up with a little thing to show you this, but basically you're going to have to maybe experiment a little bit to see how it is. But the way to cycle through those is just hit F4 multiple times, and it'll lock it either the row or lock it into the column, or if you've got both $signs, that locks it into the cell. So here I've just locked it into the cell. Let's see if I remember which one. If I just wanted to lock it into the row, in other words, as I move over, I don't want the row to change, equal this. I don't want all of these cells to be the same. Equals this, F4, F4. So I think that's the row and this is the column. So if I drag it over, yeah. But you see, if I drag it up, it will now reference the one above it, right? See, so in other words, the row has locked. It'll lock on the B row, but not necessarily B. It'll match whatever. It'll keep the column. I'm sorry. It'll match the B column. It'll lock the B column, but it'll match the row. And this $sign afterwards means it locks the row, but not the column. So anyway. So equals this one, and we'll just, because I'm just trying to lock the cell, it's fine. So we'll carry that across. And now we need to do our subtotals. So here we're going to subtotal for, well, we just really have this first thing here. So I'm going to carry this all the way across. Oh, I've already done it. I see. Never mind. Here I'm going to subtotal and auto sum, but we need to go all the way to the top here. So I'm going to highlight all of them. Make sure when you're pulling it, in other words, if I hit auto sum and you're going to use your cursor to pull it, don't include the sum, right? Make sure you don't go too far below, just down to the last number. And then we'll pull it across. We'll pull it all the way across, and then we'll do the line item sums. And so we're going to want it to conclude all of these, and then I'll pull these down. So you see that any individual months, you can see the heavy months are here in May, when you've got a number of different payments, $18,000, and the month, these 2 months, when you've got the drying and storage is a big month, and the month when we do the seeding and fertilizing for soy for the next month as well. So you can kind of see which months you need cash flow and which ones you don't. And here are the totals by category. So a total amount of cash outflows. So here we've got the net cash flow. This equals the inflow minus the outflow. And we're going to sum those two. Now, remember, this is okay to carry across. In fact, let's go ahead and do that. And then what we'll do is we'll sum that whole row. Now, remember, the opening cash is dependent upon the previous month's closing cash. So this month is February's opening cash is January's closing cash. And I can go ahead and carry that over as well too. And you notice there's nothing in these columns because I haven't populated this. So it says, what is the number in D60? Well, I haven't put it there. So this is a sum of these two, and I'm happy with that. So I would sum those up. Right. Now remember that when we're doing this is the beginning amount. So we're going to say, what was the beginning amount? It was the opening cash of January. Opening cash of January, and then you notice that there are a bunch of months where we had negative dollar amounts, and then these last 2 months is when we actually sold the harvest. And so I can go ahead and pull this over as well. So you can see that our opening amount was 309. We basically not quite broke even, but almost broke even, and didn't really make any headway into our negative dollar amount here. Okay, well, that is the cash flow, both the inflows and the outflows for 2021 for corn. So I've done that, and all I'm asking you to do is replicate this and make sure that you're can see how it is. Now, what you need to do then is to go ahead and you need to do 2022 soybeans. So let's take a look at that. So you can basically copy and paste almost everything here into another section, and it'll look very the same, but you notice I've got a few different things. I've got, instead of the fertilizer being soybeans, the fertilizer is wheat, because in November we will fertilize for wheat. So you'll have a couple of other numbers to look at. Also, even though I've got the number here for custom work, you'll notice that there won't be any custom work, so you won't have to fill that out. You could probably go ahead and say equals 150. This one is the loan payment. I probably should just put the loan payment up here, but equals the loan payment. So that'll get you started here. And then the last thing that you need to carry over is the opening cash for January of 2022 is the closing cash up here. So if we look at the closing cash, it's 310,950. So you need to go through, you need to do just what we did before. The revenue timing for soybeans is October, November. So you need to put the 50% in October and November. You need to fertilize for wheat. These are the prices for wheat. And the rest of it is pretty much similar. So as long as you follow the process of what went on before, you should be able to fill out the numbers here. Okay, well, that is the Excel spreadsheet part. The other two parts of the requirement. One part is on, let's see, doing a SWOT analysis. I will post a short SWOT analysis document that you can read to kind of get a sense of what's going on. I'm going to assume that you've already done, and SWOT stands for strength, weakness, opportunity, threat. So I'll post a document that if you haven't gone through that before, or if you need a refresher, you can look at that. It says how to perform a SWOT analysis. And the last one is in this document here, it does, or let me see right here. It says that we're asking this question. Last, if Dietrich were to pursue this land purchase, he needed to consider how best to approach his bank about this opportunity. He wondered what he might highlight from his cash flow and investment analysis, as well as past financials or personal track record, to give the bank confidence that his expansion would succeed. Now, this is this is how to, learning how to talk to the bank, or if you're an accountant consultant, how to help your client talk to the bank. And so one of the things you want to look at is understanding the 4 C's of bank loans. And so they talk about capacity, collateral, capital, and character. So I've got a short document here, a couple of pages that talk about the 4 C's for commercial lending. Make sure you phrase your answer around how would Paul Dietrich convince the bank by using information from the case study that applies to these 4Cs. So that will be what is necessary. Okay, if you have any questions, please let me know. Hopefully you'll find this to be useful. I find that cash flow analysis is one of the things you'll do a lot, and so any sort of practice that you can get would be very useful. All right, thank you, and take care.